Hey everyone, welcome back to my channel. If this is your first time seeing this channel, please consider subscribing and clicking the little bell so you get alerts. I show you ways on this channel to create wealth for yourself, to create financial freedom, various streams of income. So if those are areas of interest to you, please consider following me. So today we're going to continue with some cryptocurrency reviews. Some charts that we've done in the past. I'm just going to kind of look at them again, give you some updates on where you should tweak the charts a little bit. So we're going to start with OMG. So OMG broke out. It hit the target. It hit the negative 236, the algo target. So, and now it's come down a little bit. But if you, let me clear up a little bit here. If you can see, that that the retrace is staying above the previous high. So we could see a bounce here for an extension of this second wave. There's two ways to do it. You could either do it from down here, and basically you go to here, and then you could kind of see that we already hit that target. But now if you want to play the latest pivot, so it hit that target exactly. Look how nice that looks. See how these Fibonacci retrace extension tools really kind of give you a target? You know, we mentioned a 23.6 over here, but if you would have done the extension from this first retrace up here, would have been your other target. And if you wouldn't have gotten very greedy, you could see right here that that you would have, you know, if you would have put it a little bit under here or somewhere up in here, you would have been able to get it. So now it's retraced. So now what we could also do is we could look at this pivot and see this retrace and see where it could go. Kind of like the AB is equal to CD, so like a 1-to-1. So if we did the retrace here on this pivot, we could see we already hit the 168 again. We're bouncing around on the 65, 168. So the prime time for this to start going back up. Now we can use the extension tool. If you want to use that, I'll show you how to use that real quick. You go to the from the bottom pivot to the top, down to the retrace, and then you just kind of pull it over so you could see it a little bit better. And what I was saying is AB is equal to CD. That's equal to a 1 extension. So the length of the first pivot will be equal to the length of this pivot. Now, if you want to, you know, that's kind of like the first target, right? I'm going to get rid of this because this is from the last pattern and the last pivot. So now we're worried about this latest pivot. So this could be the first target. Of course, there's another one up here at the peak. Let me get rid of these. That's volume. So again, just like my video yesterday, sometimes you got to just come in here and clean some stuff up and see where you are right now. So certainly the peak, you know, if it forms a double top, this is going to be an area of resistance before it goes higher. So you might want to consider taking some profits there. You could see pretty quickly maybe, or maybe not. You could see maybe some resistance here because of these peaks and resistance, support, resistance. So you could draw in a support line there. Somewhere, let's see, somewhere over here. Yeah, like right there. So that could be a possible area of resistance on the upside. So if you're in a trade or you're thinking about getting a trade, right now it's down in the 618, 6.5. So this is the perfect time to average into a position. Let me go back and just draw that for you to show you why. So yeah, so down in here is where you should be averaging into a new position if you haven't. So you're right in that window. I don't know if I could just double click. DCA area between 0.5 and 0.65 fib retrace. Do inside. Yeah, that's good enough. So that's just an area, like we're right there right now with that fib retrace. And this is like the first, you're going to see some hesitation probably here. You're going to see some further hesitation there. If you want to be conservative, the 1-to-1 AB is equal to CD would be right here. That would be an area of taking profits. And then finally, the last area within this retrace target would be somewhere in between those two. So you've got multiple targets on the upside. Certainly, you got to consider that it could break down, but right now it's, if you see 15%, let me clear this off. Just kind of like the kind of like a pitchfork. If you think about the pitchfork, and you put it in on this pivot, and you just kind of tweak it to where it is right now. Once you see price action coming 15% off of this pivot, and you just put that there. That's why I have this 15 fib level here. Once it breaks through this fib level, then there's an 80% chance that we're going to go to the median line. So you can see here, if price action takes a little bit of time to break out, you could see it. That doesn't really make sense. So let me get rid of that. You know what I mean, but in terms of going back like that, that's not possible. So let's redraw that. Maybe it takes its time, and then it finally comes up here, and it's right around this median line and that target of the previous high. So that's how one possible, I'm not saying that's how price action is going to be, but that's kind of like a roadmap that you can lay out here to see where this can go. Now, usually I've been showing you the pitchforks based on the harmonic patterns, but any pivots that you see here could be a pitchfork could be drawn. So it's kind of steep, but you could even, really you could put one on this as well, Now, the thing is, though, you don't have any outside touch points, and if you do something like this, that's really steep. So you got to kind of tweaking this, maybe you assume it hit the median line for now. And once you see some reactions on the top side, you get another point up on the top side. You could, you don't want to go too steep. When you start getting really steep ones, I guess you could do this as well for now. But that's also suggesting that you're going to get two in the upside. So you could either leave this off for now or just kind of like angle it there and see as price action moves higher, or if it moves lower, figure out, where there might have been a point of resistance, or, maybe 2 points up here will create a trend line, and then you could lay out this a little bit better. But, so you got to see what happens here. Honestly, until we see more price action, we probably should just leave this one off. And we see what happens here. If it stays up here, if it starts going down further. But even if you think about the Elliot wave aspect of this, we think of this as 0 to 1 to 2 to 3 to 4. Now we got to figure out where 5 is, and so you could see here right now it's sticking to the 4 can't go below 1. Maybe wicks, but in terms of the actual pivot, it has to stay or equal to like above this level right here. So we're if it passes this in the lower area, if it comes down and goes lower than that line, let me just put a note in there. Elliot Wave 4 can't pass this. Now it can pass it, but it just means that the Elliott wave isn't it wasn't a right count for Elliott Wave, right? Let me just put this on the right. So these are some areas of, this basically what I see on the chart right now. In terms of Elliott Wave, just like this retrace that we have drawn here. If you do the retrace that we showed earlier, or the extension, I'm sorry. You go from here to here, and back down to here. Then you see up here is where, 1-to-1 is the minimum for 5, but a standard target could be up in this area. So maybe this takes a little longer. Maybe it goes to the edge of the pitchfork over there. So this is, let's just draw this in. This could be Elliott Wave 5 target. All right. So now we drew this out. We could see, the trade. You're in the DCA area for the retrace on this pivot. These are some areas on the upside of resistance, so you might want to scale out of your trade if you're in. Consider how much you want to leave in all the way. Move up your stop losses along the way. That's really all I gotta say for this right now. It's pretty good update here. We could see how it plays out if it holds to what we think it might do, and if it doesn't. And again, you always got to realize that there's a target down here based on this pivot that algos are going to push it down here as well. So this is also a negative target for the algos. And I just like to draw that in red to kind of show it's the sell side. Oop, what happened there? Oh, that was the text. So you got to keep this in mind as well. But let's move on to the next chart, and we can see how this plays out. Okay. So now 1 inch has formed. It's kind of done exactly what we kind of anticipated. It came back down, checked the support, and bounced up. But it does have some short-term negativity showing up in the charts here. And again, that doesn't mean that it's not going to continue higher. It just means that there's a pattern that's playing in here. Just remember, M's are negative, right? If M's tend to say that things are going to go down, and W's say that things are going to go up, right? And the important thing is to see this pitch. So if you see this pitch downward, that's a higher probability that's going to go down. And if you see the first low and the second low in the W pointing upward, that means it could go up, right? So right now we see right here the M, and it's pitched downward. So there is a negative bias on this chart because of this M formation. And what you normally do is you take, let's see if it has, let's see if we have a, I don't see a double top. I don't see any of that, so we just have to kind of draw it manually. There might be a pattern somewhere in here that I'm not aware of. But for now, instead of spending time looking for that, we'll just do this manually. So you want to take the neckline of where this first M, and you're gonna play the breakout once it breaks this line, and then it's gonna go down. So what you do is you measure the sorry about that. So what you do is you measure from the peak to the bottom. This is an outlier, so I wouldn't take that wick into account. But wait, let me zoom in a little bit here and show you how to figure out the target. I keep doing that. So you zoom in, All right. So you got the initiation and the first touch, so that becomes the kind of like the neckline in a Head and Shoulders, but it's the same. This is the line that we're gonna. Once this price action breaks below this, then you know it's a negative bias, and figuring out the length of that possible target, you take the peak to the point at the bottom area. This is also called a double top. And what you do is you place the height into, right at that neckline. Now you do see here, that it could come down back to where it was before. So this double top could turn into a double bottom. So right now we got negative bias down, but if the bottom ends up being higher than this bottom, then now we got a W forming, right? Got a possible W from, I'll just say from here up to here. Then if this only comes down to here, for example, then you got now one that's going to go on the upside. So this is how you play the patterns. So personally, since I'm a bull, I'm not doing the breakout down. I'm looking for this upward pitching W. If it bounces off here, to possibly trade it on the long side instead of the short side, or the buy instead of the sell. So that's what I see on 1 inch right now. Again, this is the point of no return. If it passes here, we're probably going to go lower. And then we hope, worst case, it's a flat double bottom. But a lot of times if it stops prior, if it stops at this resistance, and then we got that upward pitching W that I mentioned here, and then we could play it on the other side, and we'll clean this up and we'll see how it plays out here. In fact, we might find that it doesn't even break here. So that's even a higher pitched W on the upside. So we got to see. If it breaks down here, then there's a trade on the side. If it if it ends up using this as support and it bounces back up, then we got a positive going W. So we'll see what happens. Let me just clean up a little bit here. This is a little bit too much, but hopefully you got the point. If not, rewind the video and rewatch this area where I'm talking about the downside and then how this can actually, the downside could actually turn into a positive W for the upside. All right, so that's it for 1 inch. Let's see what's next. Dogecoin. Let me grab a coffee here real quick. All right, so Doggy broke up. You could see. Well, it broke down, but it was a false break, right? And it turned back. It actually hit the first resistance, wicked down, it came back up, then finally hit the first target and just touched the second area that we had talked about. So now what we have forming here on the 1 hour, on the 4 hour actually, we have another pattern forming. So hasn't played out yet, but it is suggesting price will go higher before it goes lower. So this is another, it's a bat pattern. Where is it? Cipher. From here to here. And it's saying it could go to 65.3. Somewhere up in this range. Somewhere up there. So we do have a positive bias here right now before we'll have to worry about some downside targets. But right now, again, you could put pitchforks here. Let's get the pitchfork tool. So you could do a pitchfork from this pivot. Tweak it in to hit this line here. So now we got that one. And then, of course, when the time comes, you have to do the XCD. Now, that's not in play yet, but you might as well throw it on the chart to see how things happen when it hits here. Now, this isn't a completed pattern, but it's these repeat itself, and a lot of them complete. So this first leg and the retrace and the bounce and the double bottom, and this is kind of like a W, right? So now, you know, if you do, I guess if you do the neckline, it's close to having a target up here. Let's actually check that out just for the heck of it here. Let's see what that target would be for the W. Yeah. Not exactly there, but it does, this W breakout, if it happens, is also suggesting it's going to go higher. So you got multiple things saying, you know, this pattern's starting to show up. It could finish up here. This W, this upward pitch W is happening. It can happen, you know, it has a target up in here. So, you know, if Dogecoin has the momentum, we could see it come up in this area. And that's really all I'm trying to say here is you can use these patterns, even though they're not completed yet. You can use these patterns to kind of guide you in which way the price action is biased, right? If there's a number of patterns that are going to be negative, if they complete, well, in order for them to complete, price has to go up a little bit more first. So you can use that, you know, to play the game of making money before this pattern even completes, right? I mean, if you believe that it's going to go up, then you got this W pattern, you got this target that the pattern's calling for, you got the target for the W, and let's check one other thing here. Let's check the fib retrace on this pivot. So yes, you can see how it actually hit the 65 and the 618 right here. So it's gotta break through this area before we have some smooth sailing to the upside. So this, you know, even though we talk about this for buying, once you enter trade, you know, this is going to be an area of resistance. Oops. This is going to be an area of area for resistance on the upside, right? Has to get past that to get up to here. So consider that. And then, of course, you know, if you are in a trade, you know, this is a target that you should consider based on the pattern. Certainly consider this one, since it's supposed to complete up there. You know, if it happens, then did it again. So those are some upsides. You can see here that these didn't play out, so let's get rid of this. Get rid of this. This target kind of has been hit already. So just in the reason to clean up the charts a little bit, let's just get rid of some of this stuff. All right, so that's where Dogecoin stands right now. You know, this is the first target. Like I said, you know, this pitchfork right here, the median line still has not been hit. So, you know, again, just as a quick roadmap, you can see, you know, it started here, it's been cycling through, but, you know, it has to break through here first, but it has, you know, there's an 80% chance that it's still going to make it to this median line. So keep an eye on it. Let's see what happens if you're in a trade already. Let's get rid of this fib. All right, so we got the target from the pattern for the W that we showed here. Let's go to a larger scale. See what's going on here at a bigger picture. So I don't know if we did this, but let's just do it real quick. So here's a, you know, from here to here, and you can see it's bounced off to 618, 65 again. So down here would have been where you would have been, getting into a trade somewhere between here and here. So right now, unless you're playing the breakout on that W, I'm screwing everything up here. This was the old DCA area. So that's just a heads up, where we were and where the trade should have happened. Right now, you either in a trade or you're waiting for the W breakout. So that's the latest on Dogecoin, whatever you want to call it. Again, this isn't a long-term hold. It would just be trading plays. So don't get married, don't get married and obsessed with a coin. Just look for the patterns, do your trade, and move on to the next trade. There's certainly ones you want to keep in your portfolio longer term, but this was a joke. This was a joke meme coin that's turning out to be beneficial for traders if you actually play the momentum and the hype and the nonsense you're seeing on social media about this coin. So anyway, that's all I gotta say for these three charts. It's a little longer, but again, I didn't say it in the beginning, but I'll say it now. Look for the timestamps. It's a little late now because you're 20 minutes in if you watched it, but it's been a standard thing I've been doing in my videos. So if you are catching this at the end here, just be aware to always look in the video description for the timestamps and the other information. All right, consider subscribing to my channel. Have a great weekend, and I'll be putting out a couple more videos. I got probably 12 more charts I want to try and get out today over the weekend or sometime over the weekend for you guys to kind of see how things are going. All right, take care. Until next time.